Hello. So I am Noah Martinez, and my partner is Madison Firstman, and we will be presenting on 3M and talking about their financial statements and doing a little bit of analysis on the way. So first, before we start getting into the nitty gritty of the financials, let's just do a quick rundown of the company's profile. So 3M is an American multinational conglomerate company. It is currently headquartered in St. Paul, Minnesota. It was founded in Minnesota as well in 1902, and now it operates in a multitude of different fields, some of them including but not limited to industrials, worker safety, healthcare, consumer goods. They are also known for their innovation and specifically innovation in technology. And this has kind of helped them carve out a sizable market share throughout the industrial and consumer markets. I think most notably, they are known for their 3M surgical and healthcare masks, which have recently become super highly demanded during the COVID-19 pandemic. So that is just a brief rundown of 3M.
Alrighty, let's jump into some of the financial statements. If we look at the annual report from 2020 and compare it to the annual report from 2019, and we look at the cash and cash equivalents that 3M had in those years, in addition to their current liabilities, we can calculate the cash ratio. And the cash ratio is essentially a measure of liquidity. So we can see that in 2020, the cash ratio was nearly or more than double than that of 2019, which indicates that year over year, 3M was much more liquid than it was in the previous year.
And then moving on to the inventory valuation model, they use the first in, first out method, which is also known as FIFO. So this actually helps to increase their overall net income, which is beneficial for garnering investor support. It keeps stockholders happy seeing a high net income. However, kind of the downside of this method is that it makes them more susceptible to increases in tax liabilities. So it is a give and take whether you want to kind of improve investor relations while also making you pay a little bit more in the tax field. Now I can start with first talking about operating income. So in 2019, these numbers are in millions of US dollars. They had an operating income of 6,174 basically million USD, and it actually increased by almost $1 billion in 2020, from 2019 to 2020. This comes as a result of reducing operational inefficiencies. So the actual sales didn't increase too heavily from 2019 to 2020. It was more so the operating expenses definitely decreased from that time. So that is why we see such a big rise in operating income from 2019 to 2020.
Similar to what Noah was saying, we also saw an increase in the net income available for stockholders of between the years of 2019 and 2020. It increased from 4 million or 4,570 million in 2019 to 5,384 million in 2020. And again, this is indicative of 3M's excellent financial performance.
Now we are going to look at basic and diluted EPS. EPS stands for earnings per share. So in 2019, the basic EPS was $7.92 per share, while the diluted EPS was $7.81. And then moving to 2020, the basic EPS increased by a little over $1. So it was at $9.32. Their diluted EPS was $9.25. EPS is an overall measurement of profitability for a company. So it is good to compare this against other competitors in the sector, specifically looking at General Election and Emerson Electric. 3M actually outperformed them quite well in the EPS department. General Electric had an EPS of negative $4.99 in 2019 and $4.63 in 2020, while Emerson Electric had an EPS of $3.71 in 2019 and $3.24 in 2020. So this is overall bullish signal because 3M is considerably outperforming their competitors in the same industry.
Now, what we also did was we looked at the information that was directly available on 3M's financial reports on their 2020 annual report and their 2019 annual report, and we compared it with the information available on Yahoo Finance. Now, we did have a premium subscription to Yahoo Finance. So in our case, we found that the numbers reported on 3M's financial statements and on Yahoo Finance matched. Now, the only difference is that Yahoo, of course, reports the 12-month trailing average, which is not available on 3M's financial reports. But we found that the numbers reported were in fact the same, though there were additional statistics not included.
So here we just have a bit of earnings estimates for the upcoming year. You can see these are 6-month differences. So the company 3M is indicated by the blue line, while the industry is the yellow line, and the kind of teal color is the overall market. So you can see that 3M has been pretty, their PE ratio has been pretty consistent. It has not been affected too much by the market. So that is always beneficial. However, as we can see, when the market is doing better or kind of recovering and the PE is going a little bit higher, 3M is kind of staying stagnant, which isn't necessarily a bad thing. It is just kind of a good hedge against inflation, and it is good steady stock in regards to PE.
That's right. And just to add on to what Noah was saying, which is completely correct, the fact that that 3M has a lower PE ratio as compared to the industry, to other companies in the industry in the US market, indicates that at least based on that ratio, they're better valued, which could indicate that their stock is fairly priced or perhaps even undervalued compared to the market.
So now, kind of to sum things up, this is gonna be the last portion of the financial statements we look at. We're gonna look at net cash flows from operating, investing, and financing activities. This is just a good overview of how the company is using their cash. So operating in regards to operating activities, we saw a sharp increase in 2020 from 2019, which is mostly due to this being the peak of the pandemic and 3M's products being heavily demanded. So their revenues increased a lot, their sales increased a lot. So we saw a very big sharp increase in cash flow from 2019 to 2020. And then from 2020 to 2021, we kind of saw growth decline a bit, but that is mostly due to 3M just having an incredible 2020 rather than 2021 being bad. It was more so just you can't have and sustain that incredible performance over a long period of time. So it was kind of just coming back to the norm and still performing better than it did in 2019 regardless. And then looking at investing activities, 3M spent a considerable amount of cash and put it into asset acquisitions and the purchase of investments in 2019, whereas this type of activity didn't really happen in 2020 and 2021. They spent nearly $5 billion in asset acquisitions in 2019, whereas in 2020, they only spent about $25 million, and in 2021, they spent zero cash on acquisitions. And then lastly, talking about financing activities and the cash flow related to that. In 2019, 3M actually issued $3.25 billion of debt. This actually increases cash flows because you're giving away debt in return for cash. So their negative cash flows were actually from financing activities were relatively higher compared to 2020 and 2021, because actually in 2020 and 2021, they spent a lot of cash to pay back that long-term debt, which it may look bad. You just see a bigger red number in 2020 and 2021, but investors, if they want to look at it, they can see, okay, a lot of cash was actually done to pay back debts, which is always a really good thing that investors like to see. So it's just a difference of these numbers, and you have to dig a little bit deeper to kind of see the reasoning behind it. But overall, that is our report on the financial statements of 3M. So thank you for listening, and we really appreciate it.